Welcome back to another video with Benny and Kenzie, and we're talking about everything real estate related. So if you like what we're doing, comment, follow, and subscribe for more. We have a lot of great content coming your way.
All right, so our first person wrote in here, I think this is a really common question we're getting because there's a lack of inventory. So this guy's just saying, hi, I'm renting right now and I love this home. The seller mentioned that he owns multiple investments properties. Do you think I could buy my own rental home? Love this question.
I mean, so many options around that, right?
Yeah.
So I had a situation recently, about 6 months ago. It was the same idea. The beauty of that is you're not competing with anyone, right?
Right, no bidding wars.
Right, so you can almost kind of set the terms with the seller. Obviously, I mean, what is your thought on having a real estate agent though?
Facilitate the sale.
Yeah.
I think it's super important here for multiple reasons. Whether it's your first home you've ever bought, you have no idea where to start, where do you get the forms, you're getting into the largest investment of your life.
Sure.
So what are those contracts? Where do I access them?
Right.
Yeah, I mean, you also look at the opportunity to do a seller concession,
right.
a seller carry.
Right.
So maybe you don't go the traditional route of financing. Hey, I just started my own company. I can't finance the home conventionally.
Right.
What are my other options? This guy has a ton of investment properties. Maybe he needs to get some equity off of his back without having to pay capital gains.
Sure.
But you can also go the finance route and have no bidding wars.
Right. I think, so in some of the experience that I've had, it's appealing, I think, to not have a real estate agent involved. But I think you touch on that, right? So the contracts and the compliance component of it, but have someone that's more of like a middleman between you and the seller, especially if
they're your landlord.
or you're not experienced in going through all that, right? And in this case, that's a very seasoned homeowner who owns multiple properties. Having someone in your corner, I think, is essential.
And I mean, it's not going to cost them to represent themselves as a buyer and have to pay the listing agent.
Sure.
So it's going to be a little cheaper depending on who pays for that commission or that compensation. So for a seller, it's advantageous to them. They have an able, willing buyer, already lives in the house, already loves the house.
Right.
And then you say, hey, it's not going to cost you as much because we just have this middleman that's just representing the buyer. Their best interest is with the buyer. They're still being represented. But the seller, obviously a seasoned, like you said, investor, maybe he doesn't need representation. He's like, I don't want to have to kick you guys out, do photos, but I do want to get that off of my back because I have a ton of equity built up.
I would not steer away from the opportunity of buying the house that you're renting.
Always ask your landlord if they're willing to sell. I think that's a super great.
You never know. You got to think about, right? We have like this historical low inventory, right? Exactly. There aren't a lot of homes for sale. And if you love the house that you're in and your seller, you may be surprised they may be willing to work with you on a situation on doing that, right? So you touched on, you can go get a normal traditional mortgage, but there are options that many people don't know about where essentially you could go to the seller and the seller can act as the bank, right? That's what a seller carry is. So the seller acts as the bank. And you set the terms with them, right? You can set the term, how long it's going to be, what the payment's going to be every month. Believe it or not, many sellers are sitting on a ton of equity and they don't want to sell and get all that cash.
I think people don't realize what a benefit seller carry is to someone like that. Because I think as a buyer, they're like, oh, that makes sense for me, but why is it advantageous for the seller to do that?
Right.
Well, they're avoiding capital gains and they're continuing to get that same income, maybe a little bit more as rental, just with an upfront down payment.
Yep.
So, and because of interest rates where they're at, even if you came in under the current market, let's say you say, okay, I'll do a seller carry of 7.5% over 30 years. Where else can you get a return on your investment that's 7.5% with your money?
Right.
So as a seller, it's super advantageous
to
say, I'll lock you in for 30 years. Oh, but maybe you'll amortize it for 30 years, but have that balloon payment maybe in 10 years.
Sure.
So there's no prepayment penalty for that buyer.
Yeah.
And say, hey, I'll pay it off, and maybe those buyers go get pre-approved conventionally in 5-10 years.
I don't know. I love this one. I think you have to get creative and explore opportunities out there and things will open up. If you're hustling and looking for a motivated seller, especially the house that you're living in. So I love that scenario.
Yeah. And then with that, I mean, you still can go get pre-approved. And I do think it's nice to have a realtor involved. I'm a little biased, but obviously. I think it is nice to have a realtor to facilitate the sale.
Right.
Oftentimes, a seller carry is still going to want some sort of credibility of like a pre-approval or what is your credit score. So having you guys facilitate that is very helpful in my experience. Okay, so here's the next one. Oh, this is kind of similar. So can I buy a house from a FSBO, for sale by owner? What does that even look like? I mean, I always like to say not every house is listed on the market is for sale. Actually, every house is for sale for the right price.
Sure.
So if you see a house that's a for sale by owner, what we call FSBOs, or just not even listed at all, I mean, I call those all the time.
Right.
And what does it look like?
Right.
You know, I see that has some risks, but I'm also, if you have some sort of representation on that as a realtor, it's less sketchy, less risky as a buyer. You just have to come to terms with the seller.
I mean, this is why I'm such a big fan of having someone in your corner, right? It's appealing as a buyer in a market when there's little inventory, knowing that you could potentially go to the agent representing the seller and go, I'll use you too, will be double commission, which could be the mindset of a buyer that's having a difficult time getting their offer accepted.
Sure.
So the reason why anyone is selling their house on their own without a realtor, for the most part, they don't want to pay realtor commissions.
Yeah.
Right? So again, can sound appealing. I think it's worth having those conversations. Great potential option to do the seller carryback, right?
I have never had a for sale by owner seller not be willing to pay my half of the compensation. I have every single time, and I work with a lot of FSBOs. They're so excited to have someone do all their documents, keep everyone in order. I love being that side of it. Hey, I'm very transparent. I'm not representing you, but I'm representing the buyer. It's my best interest to get them the best deal. But as you've already put on the market, you're a FSBO, so I'm just here to facilitate the sale. Are you willing to compensate me? And 100% of the time they are, and I've done quite a few FSBOs.
Yeah, I mean, there's a ton of risk selling your house and not having the right paperwork and documentation. I mean, can you imagine?
Yeah.
Right, so I could see that, them wanting someone on the other end to help you.
I would, you know, it's definitely pretty common to have an agent on the buyer's end of it.
Right.
So yeah, it's totally possible to buy a for sale by owner. Totally possible to buy your rental home. Just comes with a little bit creative. You got to get creative right now. Okay, this other question. I'm currently under contract on a house, and we just negotiated an extra $10,000 in seller concessions due to some major repairs the sellers were not willing to take on. How would you advise that I use the $10,000?
So seller concessions is essentially a credit that the seller is giving the buyer.
Right.
Right, and there are a ton of different ways to utilize that. And I would say it really just kind of depends on the situation, right? So in the market that we're in now at elevated interest rates, many buyers are reluctant to buy because of where the rates are, which means they're gonna have a higher payment, right? So what we've been doing lately is we will negotiate seller credits, whether it's in the initial offer up front, which if you find a motivated seller and it's been on the market a while, very good chance you're gonna get those. So we'll either use those credits to get them a lower interest rate, so it's called buying your interest rate down. And that is on the seller's dime, right? So as a buyer, it's not an extra cost to you. They're giving you $10,000 in that case. I would explore looking at that if you wanted to get a lower payment for the time being, right? We all are predicting that interest rates are gonna come down. I don't know exactly when that's gonna happen.
Right, of course.
So the beauty of that strategy is it gives you a lower than market interest rate for a period of time, waiting for hopefully interest rates to come down. Now, another way that we're doing this now is if you can comfortably handle the payment based on the current interest rates, what we're doing a lot of the times is we're using that seller credit and we're covering the closing costs.
I was just gonna say, I've seen that happen quite a bit recently, where I have buyers that are unable, you know, they would rather have those funds in their pocket. Maybe they're buying a fixer-upper and they want a little bit more liquid. So using the concessions actually towards, rather than buying down the rate, they'll start with closing costs. This is only 10 grand, but if someone was to negotiate a little bit more, maybe 20 grand, you use some towards the closing costs, and then they'll use the extra 5 grand towards your buying down your interest rate, which goes pretty far. Right. You know, it's actually better in some cases. I've found, at least with clients, it's better for them to get the seller concessions than actually get a cheaper purchase price.
Oh, big time.
Big time, right? Like that's 100% of the time, you would say? Yeah.
So if you think about when you're getting a loan, and typically it's on a 30-year term, right? It's spread out over so many years that putting an extra like 5 or 10% down, or even getting negotiating a price that's 5,000 or 10,000 less. Right. When you amortize that over a 30-year period, it doesn't really have much impact to your payment. Right. Buying your interest rate down will have ×3, whatever that is. So if the goal is, and everyone's situation is different, right? So I'll do an analysis. We'll figure out how they want long to be in the house, and then we'll figure out which way is better, right? Closing costs typically represent 2 to 3% of whatever the purchase price is.
Right.
And many first-time home buyers go into buying only thinking they need money for a down payment, not knowing that there's closing costs involved. So imagine going into a deal, the seller is paying all or a majority of your closing costs. You have to remember too, many people in the industry are talking about you're going to have an opportunity to refinance into a lower rate at some point. When that happens, there are costs involved when you refinance.
Right.
It's not free. It doesn't mean that when the rate's lower, the bank goes, this is awesome, you now get a lower rate, right? Everyone has their hand out, there are fees involved. So that's why I like the strategy in some cases of using the credit and maybe doing a combination of the rate lowering, but mainly covering the costs, knowing that in 6 months, 8 months, a year from now, you might have to have those costs again.
Well, I like what you said though about like how long are you going to be in the home? That's a huge part of it. Do you want to get your closing costs covered because you're only doing a flip? Maybe you want to have more money in your pocket so you can do those renos.
Sure.
Or are you actually going to live in this home for the average 7 to 10 years? I think that average is going to lengthen as we go into these, higher interest rate territory.
Right.
I think that it really comes down to how long you're going to be there. Because if you're going to stay for 10 years, well, heck, get your interest rate down rather than paying your closing costs because you're really going to be there a long time.
Sure, it's a cost analysis on all of them, right? And we have to figure out the best usage of all that credit.
But it's a great question, and it's a question that comes up a lot recently because a lot of people are getting seller concessions, whether it's 10, 5, 20. Sometimes more in seller concessions, but there is a limit to seller concessions. So depending on how the size of your loan,
it's a percentage of the sales price depending on what
depending on what product you have. So I mean, just
usually
knowing,
like 3 to 6% typically of the sales price.
But I remember being in a scenario where it was actually going over the purchase price. We had a lower purchase price, and they were buying FHA, and we couldn't go above X percentage. So we actually used it to instead we converted some of it to just being changing the purchase price rather than concessions. So just knowing that, call your team, who you're working with, who you're under contract with is super important to everyone's acknowledging what product.
The initial offer has to be structured correctly to make sure you adhere to the loan and also give you a great benefit, right? And we're in an opportunity right now where we have a small opportunity, I believe, to have some of this great negotiation, as a buyer.
Oh, 100%. Yeah. Okay. Well, I think that's it for today's episode. If you like what you hear, like what you see, subscribe below. I'm Kenzie Crostrom.
Benny Rabishin. We'll see you guys soon.